as a beginner trader, what you need to know first is support and resistance. Okay, what you need to know first is support and resistance. Know how to actually make entries with support and resistance. Basically, support and resistance is the basics of your strategy, right? It's the basics of every beginner strategy, and it's not just the basic. Okay, it's going to cut across every strategy you are going to use. All right, any strategy you use, support and resistance plays a major role. So your understanding regarding support and resistance is going to enable you to have upper hand over the market. All right, to be able to predict accurate entries. All right. So now we are going to talk about the definition of support and resistance. What does support and resistance actually mean? All right. After that, we are going to do the practicals. All right. Show you how to identify a potential entry point with support and resistance. So when you talk about support, support is a price level where the asset tends to stop falling and may bounce upward. Okay. Anytime the price is falling and it stops falling, all right, begin to push up, that zone is termed as support zone. Okay. In other words, it's acts as a floor, all right, where buyer steps in thinking the price is cheap. All right. We are going to do that on the we are going to handle that practically. All right. What is a resistance? A resistance is a price level where the asset tends to stop rising, okay, and may drop down. All right. We are going to handle that practically, okay. But for now, understand the theory. All right. A resistance actually acts as like a ceiling, okay. Seller steps in thinking the price is too high. All right. When price touches resistance, it often pulls back unless buyers break through it. All right. Okay, and we also have key points about support and resistance. All right, so support turns into resistance if price breaks below it. Okay, support turns into a resistance if price breaks below it and comes back up. All right. Okay, so resistance turns into support if price breaks above it and pulls back. We are going to look that practically. All right. Now, support and resistance. Resistance. Now, we are saying that a support level, all right, is a price level where the market tends to stop falling, all right? It tends to stop falling and start pushing up or may rise up, okay? At that point, buyer steps in thinking that the price is going to go up. That is basically the definition, all right? So let's first of all look into market structure. Let's look something here. Let's assume the market is pushing up, all right? From here, the market goes up, comes down, goes up, comes down, goes up, comes down, goes up. Okay, this is basically an uptrend. All right, wherever the market, okay, gets to, when the market is falling, okay, wherever it gets to and the market begin to push up is called what? Support. All right, let's represent it as S. All right, wherever the market gets to, all right, and begin to push up, stop falling and begin to push up is termed support. All right, so here you can see the market begin to fall from this zone. Okay, it fell to this level and the buyers entered, pushed the price up. So this zone is termed as support zone. Okay, we have this zone, market fell to this level, okay, and the buyers entered, pushed the price up. So this zone is called support level. All right, support. Okay, wherever the market gets to and stop falling, right, begin to push up is called a support level. All right, but to identify a very good support or a key zone, okay, it is when the price touches it 2 or more times. All right, when the price touches a zone 2 or more times, that zone becomes a very good support zone. All right, when it touches once, it is support, but it doesn't have strong or firm grounds, right? Okay, so assuming the market, so now we have this support here, we have this support here, this support here, but this support doesn't have firm grounds. Okay, a support only have firm ground when it has touched a certain zone twice or more. Okay, so let's say the market comes back, touches this zone and begin to push up. All right. Now the market has touched here twice. Okay. The market has touched here twice, which gives it a firm grounds. Okay. It gives us a confirmation that here the buyers are very strong. All right. Buyers are very strong at this level. Okay. So wherever you open the market, okay, and the price, you see the price touching a certain zone twice, all you have to do is to mark that zone, okay, is to mark that zone, right? Mark that zone to the extreme right. So this becomes your area of value, so the market has touched here twice, market has been rejected twice, okay, and this tells you that here there is a strong bias here. Along this line, we have strong bias here. So whenever the price comes back to the same zone, okay, it has a higher potential of pushing the price up or rejecting the price over there. Okay. The belief is that the market has rejected it twice here. All right. So when the market comes back for the third time, it has the ability to reject it one more time. Okay. So when the price is falling down again, okay, since you have it at the back of your mind that here the market has rejected it twice and it has the ability to reject it again, all right, what you'll be thinking of is a long position or buy, okay, because here the market has the ability to push the price up. So if the market has the ability to push the price up, what do? You buy from here. When you buy, that means you anticipate that the price should move up. Okay, we have the resistance at the top. Sellers, okay, sellers at the top of the chart, and we have buyers at the bottom of the chart. Okay, these two forces are retaliating, or they are in competition. Okay, this one is pushing the price up, the buyers are pushing the price up, the sellers are doing what? Pushing the price what? Down. All right. Okay, so the buyers are actually forming as what? These people are what? Are acting like what? What defenders? All right. Let's say two teams start playing football. All right. We have what? If you have one defender, it is very easy for the striker to maneuver to score. If you have only one defender, okay. But if you have two, it is somehow hard for one striker to maneuver or penetrate and go and score the goal, right? The same concept, all right? But if you have three, it is very hard for one striker to maneuver in to go and score the goal. That is it. So the more the touches, the more stronger the area is, or your area of value is. Okay? So let's say the price has touched here twice. Okay, it has touched here twice, which means that this and this, okay, this buyer, the two of them will join forces together, come here to fight the price when the price gets here. Okay, they will join forces together, come here to fight the price or retaliate. They will prevent the price from pushing down. Okay, yes. So when the price is approaching your zone, what you need to be thinking of is to be thinking of buying. Okay, but you cannot buy instantly when the price gets there. You need to get other confirmations, right? You need to get other confirmation in order for you to what? So the bullish candlestick formation we learned, you need to see some of them here. Okay, you need to see some of them at your area of value or your key area. Once you see them, then you can decide. The first confirmation is what? The double touch. Okay, the touch at the bottom. Okay, so your key area is your first confirmation. The second confirmation is going to depend on what? The candlestick that is going to form around the zone. Okay, the Dragonfly Doji. Great. So we have Dragonfly Doji, which is this. Okay, we have something like this. Dragonfly Doji, which is something like this. Okay, we have something like this. What is hammer? We have hammer. We have hammer. We have hammer, something like this. We have bullish engulfing. We have shooting star. The white soldiers. Okay, so that is it. Now, all these candlestick formation that you are mentioning, you need to see them here. Once you see one of them here, it is confirming that the price has a higher potential of pushing up. Okay, so let's say you have something like this here, bullish engulfing here. Okay, this is a bullish engulfing candlestick pattern. Okay, and bullish engulfing candlestick pattern tells you that the price, okay, has the next candle being bullish is very high. Right, once you see this candlestick formation, the next thing you do is to enter for entry, because the next candlestick being bullish is very high. Okay, so you enter. Right, this is support, basically support and resistance. Right, all you need to do is to identify your key area. After identifying your key area, the market touches there twice or more, then you wait for the price to come back to the same zone to form your candlestick formation or pattern here around the key area. Once it is confirmed, you enter for buy. Okay, so now when the candlestick is coming, this candlestick, let's say if you have a candlestick like this, okay, a candlestick without a wick or with less small wick, okay, is called a momentum candle. Okay, so the size of the candlestick also matters. All right, the size of the candlestick also matters. So let's say you've identified your area of value or your key area or your support zone. All right, now you're waiting for the price to come back to this zone, all right, to mitigate or to form your candlestick formation. Right, so when the candlestick is coming, okay, or the price is coming, you need to also check the formation of the candlesticks. All right, you need to check the formation of the candlestick. So the candlestick can start with a momentum candle. Okay, when you're approaching your zone, it begins to drop in sizes. Okay, begin to drop in sizes. All right, at the end of the day, give you something like dragonfly doji, candlestick rejection here. All right, so now what this says is that, okay, the market strength. All right, so from here you see this is a very good candlestick momentum candle, and along the line it begins to reduce in size, which means the buyers have started fighting the price along the line before getting to your zone. So before the price gets to your zone, it has become weak already, right? So all you have to do is to wait for the price to give it some form of confirmation around your key area, and you execute the trade or you enter for long. Once the candlestick gets rejected around your area of value, it means that the buyers are fighting the price. They are pushing the price. Okay. Sometimes you can see multiple candlestick rejections. Okay, multiple candlestick rejections. It strongly indicates that the buyers are having control over the market. They are fighting the price to the upside. So when the price bounces back at this zone, okay, goes up and come back again to the same level or the same zone, okay, your duty is to wait for the price. Okay, as the price is approaching your zone, just look at the candlestick formation whilst the price is coming. Okay, is it coming with very high momentum candles, or is the candlestick reducing in sizes? Okay, if it is reducing in sizes, it tells you that, yeah, it is the price is losing its energy. All right, it is losing its momentum. Okay, so once it gets to your zone, calm down, wait and see this bullish candlestick formation. Right, once you see it here, you execute directly. Okay, you don't wait. Once you see it, just execute it. All right, some of you might think that this is very easy strategy, but trust me, it counts in every strategy that you're going to use. Okay, it counts every strategy. Support and resistance count in every strategy. It's not for beginners. Right, and as time goes on, you are going to understand why I said that. Okay, we are going to use this a lot. All right, and we are going to actually go into the chart to also analyze it as well. Resistance. Okay, we are going to talk about resistance. Okay, after that we are going to actually go into the chart and identify this kind of strategies on the chart. Okay, resistance is opposite of support. Yeah, so guys, resistance is opposite of support. Okay, one thing about this field is that once you have the knowledge of one strategy, you use it, you apply it to the opposite side. So in the definition we said a resistance zone is a zone where the price stops rising, okay, and begin to fall. Okay, so let's say we have this here, we have the market pushing down, giving us lower lows and lower highs, lower lows and lower highs, right? This is to tell you that the price is in downtrend. Okay, right? This zone is resistance, this zone is resistance, this zone is a resistance. Okay, it tells us that when the price stop rising and begin to fall, it's a resistance. Okay, so here the price rise to this level and begin to fall from here to the downside, it's a resistance. Okay, it rise to this level, begin to fall, it's a resistance. Rise to this level, begin to fall, so this side is a resistance. So what this means is that here the resistance are acting like a ceiling. Okay, they act as a ceiling on top of the chart. Resistance also means that sellers. All right, but to identify a key resistance zone, the price need to touch a certain zone twice or more. All right, like I told you, one defender has no strength to what, has no much strength to prevent a striker from scoring. Okay, but if you have two, they will prevent the striker. Okay, and three has much strength to prevent a striker from scoring. Okay, so now we have one resistance here, one resistance here, one resistance here, one resistance here. Okay, these resistances are not having enough strength, okay, to prevent the price from what, going up. They don't have the enough strength. Okay, once one resistance comes to add to the ones here, that is when the strength comes become what, much powerful, or it builds up strength. Okay, so let's say the price comes, start pushing to the upside. Okay, let's say from here the price start pushing to the upside. Okay, begin to push down to this level. Now what do you see? You see the price has rejected from this level. Okay, so it has rejected twice. Okay, so this zone becomes your key area or your resistance area. Okay, so you draw your line, okay, to mark the key zone. So at this level, the price has touched this zone twice. Okay, making it a very strong what, key area or area of value. All right, so as a trader, your job is to wait for the price to come back to the zone. Right, your job is to wait for the price to come back to the zone. And once the price comes back to the zone, since it has rejected here 1, 2, it has a higher potential of rejecting it for the third time. Okay, it has a higher potential of rejecting it for the third time. All right, so what you need to do is to wait for the price to come back to the zone. Right, once price gets back to the zone, all right, you look for your candlestick what, formation. Okay, you look for the candlestick formation here, your candlestick formation, bearish candlestick formation. And once you see it here, you execute it. So at the end of the day, if you see something like this, this is bearish engulfing. Okay, this is your key area. And when you see your candlestick formation or candlestick pattern around that zone, it tells you that the price has a higher potential of pushing down. Okay, bearish engulfing tells you that the next candle being bearish is high. Okay. Okay, the next candle being bearish is high. And if you know that the next candle being bearish is high, what do? You enter what? You enter from this zone as sell. Okay, enter for short and you target down. Okay, as time goes on, I'm going to show you how to actually set TP, okay, and stop losses. But for now, understand where to make an entry. Another candlestick formation you need to see, okay. Let's assume, let's say you see this form of candlestick, okay. You have You see 3 bearish candles forming together, okay, consecutively. It tells you that the bearish is gathering momentum to push down. All right. So in this situation, what you do is to enter for short, okay, and target down. All right. All you need to do is to identify your candlestick pattern around this zone, okay, your area of value. Wait for 2 or more touches. All right. After the touch, draw your key area. Wait for the price to come to that zone. Okay. Wait for the price to come back to that zone, and then what? Execute the trade when you see your candlestick formation. Is this clear? Like I said, along this line, after identifying your key area, okay, along the line, when the price is coming, okay, you also need to check the price, okay? Check the price around this line. The behavior of the candlesticks, all right? The behavior of the candlesticks, it's very much important, okay? Sometimes the candlestick, before the price gets here, the price has lost its energy already, right? Due to the candlestick formation. That's why whenever you are looking for an entry, don't make an entry against the trend of the market if you're a beginner, right? So if you're a beginner, everything you need to do, or anytime, just look for an entry which is going alongside the trend. Okay, this is a downtrend. So if you're looking for an entry, you need to look for an entry that also goes down. Trade in the direction of the market. One more thing, okay, whenever a resistance is broken, okay, it turns into a support zone. Whenever a resistance is broken, it turns into a support zone. So assuming we have this resistance here, okay, we have these 2 resistances here. Market comes back, we test it, comes down, and breaks it. Okay, this is our area of value, this is our resistance zone. Once this zone is broken by the price, this zone no longer is no longer a resistance, it turns into a support. Okay, this zone turns into a support, and it has a higher ability or probability of pushing the price back when it gets to the zone. Okay, when the price gets to this zone, it has a higher probability of pushing it back. When a support gets broken, okay, it turns into a resistance. It's opposite. When a resistance gets broken, it turns into a support, and when a support gets broken, it turns into a resistance. Okay. So for example, when you have something like this, this is your support zone, all right? Once this price gets here, broken it, okay, break this area, now the support becomes what? A resistance. When the price comes back to the zone, it has a higher potential of rejecting the price at that zone, okay, and pushing it down. All right? The same thing, you need to look for your candlestick formation around the zone. You need to see a confirmation. You cannot just enter because you've seen a support. You need to get a confirmation, and the confirmations are what we've actually learned the previous session, okay? The candlestick formations. Okay, now, right? I told you wherever the price touches twice, okay, we begin to draw twice or more, we draw our zone there, okay, our key area. Okay, so now what we are not going to look for, we are going to look for support zone, okay? Then we draw our key area there, okay? Support zone, then we draw our key area. So from this side, from this area, we can see one rejection here. We can see this, okay? Can see this rejection here. We can see this rejection here, okay, and this rejection, okay, all right. And in support and resistance, okay, these zones, these rejections also matters, okay. Anytime you see the price rejecting in a certain zone several times, okay, that zone is a key zone that the price will have to find it difficult to break it. If you see this zone is a rejection area, okay, rejection area, rejection area, okay, this zone is also a rejection area. So we have this rejection here, okay, We have this rejection here, this rejection here, this rejection here, this rejection here. Let's see if you can see something there. Let's see if you can see, we can get something out of that zone. Okay, let's draw our key zone. Okay, market started rejecting from this level. To this level. Okay, all right, see, the market started rejecting from this level. Okay, we have this level. Okay, rejected, rejected, rejected. Okay, rejected, right? Rejected. Okay, rejected from this level. So check the last one. See, check the last one. You can see what kind of candlestick formation is this one. You can see this. We have this bearish candle right here, which is the red one, and we have this bullish candle right here, which is the green one. Okay, look at how the bullish is engulfing what? The bearish. Okay, all right, this bullish candle is engulfing this whole candles right here. Okay, this bullish candle is engulfing this whole candle right here. It tells you how strong the buyers are at this point, right? So this should be your first confirmation. Second confirmation. As time goes on, I'm going to show you how to get more confirmation when it comes to support and resistance strategy. Okay, but for now, get these confirmations. All right, and at this zone, if you had seen this entry and entered from here, okay, entered from here, this will be your profit. All right, from this zone to this zone will be your profit, and you are going to book not less than 150 to 200 pips. One more thing, your key areas. All right, the candlestick can find itself in the key area. Okay, your zone, the candlestick, the body of the candlestick can be in the key area, but the body of the candlestick cannot close below the key area. Okay, it is a taboo for the body of the candlestick to close. Let's say this candle, for instance, to close below the body of the key area. Okay, it doesn't supposed to close below your key area. Your key area should be in a zone whereby none of the candlestick will close below your key area. Okay, yeah, the wicks can be below your key area, but the body cannot be below your key area. So now we need to look for our key area. Okay, we have rejection here, we have rejection here, we have rejection here. Okay, we have rejection here. All right, so what we need to do is to draw our key zone. Okay, indicate the zone. Okay, and wait for the price. Now we indicate the zone. Remember, I told you the price can actually. All right. So now we have our rejection area here. This is a rejection area. Price got here rejected. Okay, rejected from this zone. Okay, with a very high wick. Okay, so this is dragonfly doji. Okay, the last candle is a dragonfly doji. Okay, but check the last two candles here. You can see this candle. Okay, this candle to this candle. What do you see? You can see this bullish engulfing here. This bullish engulfing. This candle is actually engulfing this whole candle right here. Okay, it's engulfing this whole candle, and it tells you how strong the bullish are or the buyers are. Okay, it tells you how strong the buyers are. So from here, so look at the move. Look at the move this zone was able to cause. Okay, check this zone. This move this candle bullish engulfing, this bullish engulfing right here was able to cause the whole of this move. We have resistance here. Let's see if this is going to match our. Okay. You have this right here. Okay. So guys, you can see from here, market got rejected. Okay. Got rejected. All right. Even from this zone, you can take an entry. Okay. You can take an entry right from this level. Okay. You can take an entry because you can see from here, you can see a gravestone doji, right? Gravestone doji. It has touched 1, 2. Okay. And from this zone, we have multiple rejections here. So here is a key area. All right. So 1, 2. All right. And from this zone, you can see gravestone doji. After this candle completes its section, okay, you can actually base your entry based on this. Okay, you can enter based on this entry, this candle formation. Okay, but if you are not comfortable with that, you can wait. Okay, this rejection as well. You can see from here, you can see this candlestick formation, dragonfly doji. The same thing. It has proven to you that this zone has a strong sellers. Okay, sellers are very much stronger here. Okay, sellers are very much stronger here, and they are pushing the price down. Okay, pushing the price down. All right, but the last one is the most interesting part. Okay, the last one is the most interesting part. Check this one. Check this one. What do you see? You see bearish engulfing. You see bearish engulfing at the last point, right? And this bearish engulfing brought this push to the downside. Guys, after you have gotten your rejection area, market has rejected it 1, 2, 3, okay, 4. Okay, you need to also see check the extreme left side if there was rejection around that zone. Okay, check the extreme left. Okay, if there was a rejection. Okay, if there's rejection, it's going to actually support your key area. It's going to support it, give you a very good confirmation. From here, market has rejected from this zone. Okay, rejected from this zone, this zone, this zone, and this zone. So this is your key area. This is going to be your key area. Okay, after you've seen 1, 2 taps, okay, it should be your key area. Third one is okay. All right, it gives you a strong confirmation. All right, now the last one, okay, the last one, check. You can see this candle is actually engulfing this zone. So if you check the last candle, check the last candle, what happened? Okay, the last candle is engulfing this zone. All right, it's engulfing these 3 candles. All right, which tells you that the bullish momentum is very high, or the strength of the bullish is very high. Okay, or bias is very high. So it has a higher potential of pushing the price up. And check this, where the price go, it went all the way to this level, all the way up. Okay, so always wait for the price to come to your key area. Don't just hop into a trade just because you've seen the candlestick moving to the upside, okay, giving you gains, then you are buying. No, it doesn't work that way. Okay, wait, be patient for the price to come to your key area, your area of value, and execute. All right, execute. When it comes there, don't even wait. After you've gotten your confirmation, execute it. Right? What most people do, or most beginners do, the moment they see, let's assume this green candle, the moment they see the green candle moving up, then they are entering for buy, thinking that the price is going to go more up. It doesn't work that way. Okay, you need to enter for a reason, or with a reason. Okay, don't just enter because you want to make money. Enter for a reason. And check this. Okay, you check our key area, our point of interest. You can see there's rejection here. Okay, This rejection right here has the ability to prevent the price from pushing down. Okay? This rejection here has the ability of preventing the price from pushing down, even if the price closes below this level. Okay? Even if the price closes below this level, this still has the ability to push the price up. Okay? Okay, it wasn't rejected at this, only this zone, it was rejected at this zone as well. Okay, this zone as well. So the whole of this zone is a rejection area. Okay, which can support your entry at this level.